And I think the bigger one that all crypto people are looking forward to is obviously the Clarity Act, which I think is very big. What it really stands for, conditions are going to improve for crypto in the US. And we're going to lead the way. In the past, other countries have led the way in terms of crypto, but I think that's going to change.
The cryptocurrency industry continues to wait with bated breath for the next development in one of the most important regulatory and legislative milestones it has ever faced. Sometime next month, the Senate Banking Committee is expected to mark up the Digital Asset Market Structure, or Clarity Act, which, among other stipulations, aims to delineate regulatory responsibilities between the SEC and CFTC. The markup and subsequent floor vote will be the most historic event for the cryptocurrency industry, and, like most historic events, it's met with a few hiccups, particularly the crypto versus banking industry standoff over stablecoin yields. However, according to recent reports, these issues have been almost completely resolved, and the Senate is ready to proceed. Here are two recent updates from Coin Bureau's X account. Senator Tillis pushes to advance Clarity Act. Senator Tom Tillis says he will ask leadership to schedule a markup for the Clarity Act when lawmakers return, citing a lot of progress on the bill. He added bank concerns over stablecoin yield have largely been addressed, with draft language expected 4 to 5 days before markup. A follow-up post reads, Update, Clarity Act markup moves closer. Senator Tom Tillis said the yield issue is largely resolved, with negotiations now focused on ethics language and DeFi provisions, including the Blockchain Regulatory Certainty Act and Section 1960. Senator Cynthia Lummis added that there has been significant progress on safeguards for non-controlling developers under money transmitter laws. Sources say ethics provisions are still being negotiated and are more likely to be added at the Senate floor stage. In today's video, we bring you important market updates, covering what's happening not just in the crypto market, but also in the macro environment and geopolitical landscape, and what it means for markets going forward. If this sounds good, don't forget to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video. Every cycle, people make money in crypto. Every cycle, people lose it to hacks, exchange collapses, and compromised accounts. iTrustCapital's premium custody fixes that. It's a closed-loop system. Crypto goes in, but withdrawals only come out as USD to your verified bank. Nobody can drain your wallet because there's no external wallet to drain. Assets are held one-to-one, off-balance sheet, with full tax reporting. And inside an iTrust IRA, gains can grow tax-deferred, or tax-free in a Roth. Real U.S. customer support. $100 bonus when you fund through the link below. Same market, smarter structure. As stated earlier, the Clarity Act has encountered a number of setbacks, particularly banks refusing to allow yield on stablecoins for the fear that Americans will stop saving in non-yielding bank accounts and instead move their money into stablecoins. When the issue first surfaced in January, Bank of America CEO Brian Moynihan warned that the U.S. banking industry could face a massive drain of $6 trillion in deposits if Congress allowed interest-bearing stablecoins to act as competitive alternatives to traditional bank deposits. Other banking giant CEOs have also accused crypto firms of trying to reap the benefits of the traditional banking system without facing the same strict regulatory checks. The back and forth has continued since mid-January, and crypto investors have even begun to give up on the bill being signed into law this year. However, with the latest update from Senator Tillis, who only last week was asking for 60 additional days to speak with banking industry executives, things seem to have taken a more positive turn. Billionaire investor Mike Novogratz believes the entire thing will be resolved soon, and that the bill will be signed into law in June. With the yield issue now largely resolved, according to the senator, the only major stumbling block to a May floor vote is the ethics issue, with the constant rumors of insider trading plaguing the Donald Trump administration. Democrats are reportedly raising earlier concerns that the legislation would benefit crypto ventures associated with the Trump family, including World Liberty Financial and various meme coins. How that will impact the floor vote remains to be seen, but even a scheduled market-up session will instantly lift crypto market sentiments and maybe even prices. While this one uncertainty may be nearing resolution, other uncertainties continue to hang over the markets. Earlier today, oil prices spiked to their highest since Russia's full-scale invasion of Ukraine in 2022. Brent crude rose by almost 7% to over $126 per barrel before dropping back to $116, while WT1 crude futures rose to $111, then steadied around $107. This came after reports that the U.S. military is set to brief President Donald Trump on new plans for potential military action in Iran. In a recent discussion, Anthony Scaramucci and Mike Novogratz discussed the current macro environment and its implications for the market. Their discussion touches on the $166 billion tariff refund, the stock market, the Iran war, and potential Fed rate cuts in 2026. Here are some clips from the discussion.
It's a stimulus for the economy, which is already growing fine. And so it's GDP, right? That's just what it is. And we need more debt to finance it. And so should be yield curve steeper and should be rates stay higher for longer. And so, listen, Kevin Warsh is going to get approved, I think, tomorrow or the next day. Exciting, new era. Hats off to Jay Powell, who I thought did a great job for his entire tenure through a lot of political turmoil. But Warsh starts. We know Warsh is a believer in the awesome capacity for AI to increase productivity, but he's also got a pretty strong economy, mostly from CapEx build and high-end consumption, and that's not slowing down, and this is going to help it. And so I think, it's probably longer than we hoped before he cuts the Fed funds rate, even though he had kind of given Trump the wink, wink, nod, nod, I'll be a dove. I still think he'll cut it this year because he really does believe that the productivity miracle is coming.
The price of gasoline has gone up 35-40% in the last couple of months, obviously direct result of the war. I don't know. The war doesn't seem like it's ending anytime soon. Ed Luce writes in the paper this morning, get ready for a very long Iranian war. But the market is pricing perfection. So is the market have something wrong or something so right?
So the market got hyper oversold in the peak of, right? It got sold down and then sold down and sold down. And I remember when we had the first uptick, talking to my friend Paul Jones, and he warned me. He said, before you fade this, remember what happened with COVID. COVID had gotten sold down so much that after it bounced a lot, it never pulled back. It just kept going. And we had the same exact thing here. From the low, the S&P, from the low, which was, March 30th at 6,400, pretty much in a straight line with, I'm looking at the thing, one or two flattish days, we rallied 14%, right? Between, March 1 and April 27th. That's a pretty high Sharpe ratio, 8 Sharpe ratio, 2 weeks for. And, we probably got overdone. Now you probably pull back to 7,100, 7,000. And my guess is we pull back to 7,000 before we take the next leg up. I'm pretty damn positive we're going to take the next leg up just because of the AI pipeline.
Talk a little bit about the economic dashboard. So rate cuts coming, even though oil prices are up and there's some tweaking of inflation. Yeah, rate cuts coming.
Rate hikes coming in Europe because they don't have a dual mandate. They've got an inflation. I don't think they hike in April, but I think they pause in April, and I think they probably go in June. My guess is they do 125, maybe 2, and then they're like, why do we do that? Because this war will end at one point, and oil will go back down. The U.S. doesn't have a stomach for a prolonged war, so I do think we'll end this. If we don't, I'm wrong on that. I think rate cuts coming towards the end of the year, even though we're going to have some really high inflation.
As markets try to digest both regulatory progress and rising geopolitical tension, a new report highlights an important shift beneath the surface. Seasonality may be quietly tilting the odds back in favor of the bulls, even as Bitcoin ends April on the back foot. Historically, May has marked the beginning of a stronger period for risk assets, and Bitcoin has often followed that pattern. While April closed in a more defensive posture, with price action showing hesitation and reduced momentum, this isn't necessarily a bearish signal. Instead, it reflects a market in transition, where traders are recalibrating after a volatile start to the year. In fact, analysts point out that periods of consolidation like this often precede the next leg higher, particularly when broader liquidity conditions begin to stabilize. What's especially notable is that Bitcoin's recent weakness hasn't been driven by a collapse in fundamentals, but rather by external pressures, macro uncertainty, rising oil prices, and geopolitical risks. Yet beneath that surface-level caution, there are signs of resilience. Long-term holders remain largely inactive, exchange balances are relatively stable, and there's no clear evidence of panic selling. In other words, this looks less like a breakdown and more like a market catching its breath. At the same time, derivatives positioning suggests traders are becoming more cautious in the short term, with reduced leverage and a more neutral bias. That kind of reset can actually be constructive. It clears out excess speculation and creates a healthier foundation for sustained upside, especially if macro conditions begin to ease, or if catalysts like regulatory clarity start to materialize. When you zoom out, the bigger picture becomes clearer. If seasonal trends hold, and if the Clarity Act progresses as expected, Bitcoin could be entering a phase where multiple tailwinds begin to align: regulatory certainty, improving liquidity conditions, and historically favorable market timing. And in markets, it's rarely one factor that drives the next move. It's the convergence of several. So while the headlines may feel mixed right now, oil shocks, geopolitical risks, regulatory debates, the underlying structure of the market is quietly shifting. And if history is any guide, this kind of setup is exactly where momentum begins to rebuild. Now the question is simple. Does the market follow the script it has so many times before, or is this cycle truly different? If you found this breakdown useful, make sure to like the video, subscribe to the channel, and let me know your thoughts in the comments. Do you think Bitcoin follows its seasonal trend this time, or are we heading into something completely new? Thanks for watching, and I'll see you in the next one.